So customers, we've seen that provide a more comprehensive view of their financial situation. It has allowed financial institutions to offer them better tailored and personalized products. We can give direct examples with respect to our business. We enabled a super personal finance management app that is helping consumers manage debt and provide them real-time balances and then automate their bill pay. So this just brings in a lot of value and time savings for the consumer, but also improves the whole experience with respect to managing bills, which are exploding. One recent statistic we heard is about a consumer or household pays about 10 to 12 bills per month. The other one, which is a very interesting example, is a mortgage processor is looking at all types of data that a consumer has. For example, what types of student loans they hold, because they want to recompute mortgage applicants' debt-to-income ratio and ignore all the federal student loans that are sitting on their credit file. And this expands coverage to folks who wouldn't necessarily have access to those mortgages or would have been rejected for high student debt. So we are seeing all different types of use cases pop up in personal finance or lending that are being enabled by greater access to financial data. Yeah, again, from our perspective, the few areas where we see a direct impact is improving access to credit. As simple as by having access to comprehensive financial data. A financial institution can offer loans and other credit products to a wider range of customers, including those who may have previously been deemed too risky or unable to access credit. Also, providing better digital experiences and customer engagement experiences with respect to managing consumers' bills, finances, providing them more deep insights or even promotions that can lead to higher savings. One additional area where we've seen better financial well-being is financial institutions being able to detect fraud. With better access to financial data, we've seen better fraud models that institutions have employed while making lending decisions. We are. So Method has a unique technology for consumer identity authentication and retrieving that data. And as such, we've submitted a formal response to an outline of proposal and consideration put forth by the CFPB as part of the Section 1033 rulemaking. As detailed in our responses, the rulemaking should establish and maintain third-party data access via other mechanisms which are credential-based or screen scraping-based that also allow access to data with consumer PI and account numbers. And these solutions that we're proposing expands access to consumers who are generally under online banked or lower income, because it does not necessarily depend on credentials that only well-to-do consumers have access to. So our position is open banking regulation has been enacted around several parts of the world, from UK to Germany, and what we've seen is consumers seeing the benefit in the form of better lending rates, higher digital banking adoption, and products that meet demand for more instant access to credit or data. And the United States is definitely lagging behind, and a unified regulation framework will only help drive competition and innovation, which will ultimately benefit the consumers.